Well, good afternoon, everyone. Hey, it is Shooter Scott Henderson. Hey, and we are going to go over swing trade notes. All right. At the end of our presentation, please do review our disclosure. Hopefully, everyone had a wonderful weekend. Well, let's jump right into this. We saw some heavy selling last week, continuation. I think there's a chance that we go into a bear market here. So let's just review what some of the market drivers are. When we get an infusion of 100 billion in cash, typically that gives the S&P a bounce. We did not see that with the TSMC announcement, the investment. I think they're doing 4 plant, but we want to watch that because there's still some licensing requirements coming out of Taiwan that are an issue. And of course, China is still capping inbound investment or in technology and the chip sector. Now, I was hoping the National Crypto Reserve was going to give us more of a pump, but like I noticed earlier in the week, it looked to me like a sell the news kind of event. And apparently that's what we did get. So what gains we did receive, we've pretty much given them all back. Now, the Trump tariffs, we got a pump, and there's an article that I have out on that. And I'm going to suggest that you guys review it. It's, a number of quarters play. It's not overnight, but equities, there were certain sectors that rallied off of that, automotive as an example. Semis turned south. Retail was mixed. Commodities and gold and silver, flight to safe for sure. Supply chains, shipping costs, flat to neutral. Auto parts really didn't see much of a bid. China also announced that they're pushing their budget to 7.2% for national defense. So that's going to prioritize modernization. So I don't see Xi Jinping changing his tightness on military control. So I think that is a headwind for us. So the major indexes, the S&P closed at 575, down 302. Test the 50-week moving average, 50, NASDAQ briefly entered correction territory, but it did definitely look better than the SPY. And one of the worst performers was the Russell. Now, good news is we sort of predicted that early, gave you a little hindsight on it. So what we want to watch this week is Tesla, Microsoft, and Costco, because overall earnings have not been bad. I think 80% plus 82% beat, that's pretty good. So Bitcoin held a range of roughly between 86 and 94. I'm still expecting one more dead cat bounce. We should flush down to about 78K. Then I think we push about 95K, and then we give up RC. So I'm thinking we have an ABC structure, an Elliott wave. And, honestly, Ethereum's being steady Eddie. It's declined, but it's still held its own. XRP, Solana, ADA, took some lumps on Trump, but they've sort of leveled off at this point. Looking ahead into next week's catalysts, we got jobs on the 8th. We have CPI on the 12th. And we have Fed speakers Powell, Waller, and Williams March 15th on monetary policy and guidance. I think that's noise. I don't think that'll affect us, but it could. We just want to know that it's there. So if we have any positions that potentially could be at risk for that, obviously we can navigate those waters. The SPY has to reclaim 600. Now, on my chart that I published in chat, I have a lower figure noted there. We must get above here for us to get any kind of bullish basis or even have a chance to get back at 600. There is a chance we bounce this week. It's just the market structure that we have. All right. Bitcoin needs to hold 100K. Conversely, it breaks below 86K. We likely test 60,000. So defensive positioning remains your primary strategy. If you're holding longs, hedge. Because if we give this up, we have a sizable drop from here. There's not a lot of support below us. Not much at all. So once that confidence is lost, expect a flush. And it'll be aggressive, 8% plus. I can't stress that enough. So I want to focus on the psychology here, position sizing. Now, I've been at a half position size all year, and that has a lot to do with how I ended last. And at this point, it hasn't done me wrong, but it probably did cap my earnings in January, which turned out to be a good thing. But overall, it's protected me in February and going into March at this point because I don't have a lot of risk capital on, so I can't take a hit. Right? So I think we continue to downsize in our thing. And I'm nowhere near hitting that threshold, but I'm thinking smaller pieces. I think I'm going to cut position size going into the end of March unless we come out of it. You know, I'm still thinking, why should the dip buyers stop? Jobs are good. Earnings are good. You know, even though we have this horror bad news, the world's ending on every front, it seems to be with the news. Actually, I can't even watch it anymore, but I do. My gut is we're not that bad. We're not in corrective territory where we're going to go into this new bear market. I don't see it. So that's my hesitation getting too short. I'm limiting my risk by position. So add to what's working and trim what's not. That's simply how it's going. I still like gold and silver as a safe place to camp for a little while. We also laid that out in chat. I also still like the VIX. We also laid that out in chat. Okay. Which, by the way, folks, if you haven't joined us, the 50, 75 bucks or whatever it works out to a month, I don't even know what we charge. Isn't that bad? Isn't that horrible? I don't worry about it. I just do my thing and roll. So, you know, hey, just the background that we provide, besides what we're adding here, you're not finding that anywhere else. I mean, contextually, we have a very superior product to what else is out. And I'd be very candid because I take their ideas I like, and then I add my own. And now that I'm adding in Sentinel, I mean, let me tell you what, we have a very broad visual of what's going on in the markets. We have a better grasp today than I think we've ever had. So earnings next, that shameless plug, okay? You know, Rare, I think Kirk is running a special on that right now, by the way. So of course, by all means, we'd love to see you. All right, so this week, there's actually a lot of earnings here. I'm just hesitant with what's going on with the sell. You know, I don't ever like last week, you know. I think I'm going to take a shot at Netflix out of the gate. So earnings, you know, performance, we had 82% of them beat. Revenue performance beat by 63%. Quarterly guidance, 24% of the S&P companies providing guidance on the upcoming quarter, 24% issued negative. So 74% in total have offered positive guidance. Annual guidance is about 60% have guidance fiscal year aligned with a 5-year average of approximately 69%. That is not bad. Disappointments were Costco and Marvel. I was really disappointed. Neither of them. I thought they would hold up. Yeah, and, you know, the bias, I have to get rid of the bias. That's what Sentinel keeps telling me. I have to get rid of my bias because he's more strategic than I am. You know, I think I've learned more from artificial intelligence than I've learned from anything else in my life. Isn't that horrible? I don't know. It's a good thing. It's positive out. So let's look at what's going to potentially hit next week. So the standouts for me are DG, and I'm going to go to the chart. This gap. Okay. And I just measured this leg. I didn't measure this leg. I didn't go way back up to this 164. I just measured this line. 50% back is 94 bucks from where we are now. So at 81 bucks, you know, basically I'm talking a $13, $15 trade if it manifests. That's a nice looking candle. Looked at the options. Yeah, I think somebody knows something. I think this thing's going to report decent. That's going to put it back up to at least the 382. So target 88 calls or just sell cash secured put. That's my thought pattern on that. And of course, we break this down in the article for Rare members. Now, I'd like to highlight here, it's a 9 out of 10 on the cash secured puts as far as position. That I like that look. That is a very safe bet. That's very safe, okay? And we actually break down the strategy for you in these articles now and give you a play-by-play or a blow-by-blow of what would work with strategy A versus strategy B so you can do a comparison without having to think about it. Now let's look at lie. Kirk's not going to like this one. It's China. China has popped. We have not seen this roll into automotive sales yet. That's reflective in Tesla as well. That will be where it manifests if we continue. Projected remainder of the year growth is around 16%. That's going to wash into something like lie. So that once that starts moving, I think we're solid to 35 or 40 bucks. That's my thought. So from where our price is right now at 25, initially, target at the money calls for earning, right? That's what I would do. And then I would plan to add after we pull back after earnings for a longer term position. That would be my thought. All right, let's look at Oracle. Now, I like Oracle better down at this band because we haven't filled the gap. We're into the gap. Now realize there are usually two scenarios with a gap. Gap gets filled or gap gets filled to 3/4 of the way. We just hit 3/4 of the way. Now we have some seller exhaustion, but not a lot. This was decent seller exhaustion, which I'm looking at. And this was decent seller. So the sellers were giving up here. They gave up here. They gave up here. Maybe one more. So I like it better here. but I don't know that we get that in an earnings week. So really depends on your risk. Maybe half of what normal size you would do. Target the 155 calls to 160 calls. You could still do March, I believe, because of the 21st. But April will insulate you more if it missed. That's the only thing. All right, let's look at Adobe. It's a really good look. Nice. We've got the weekly demand zone right here. We sort of are bouncing off. Nice divergence here on this. Look at this. We have our confirmed low, divergent low over here. Nice RSI structure into this. The only thing is this last little leggy. But still, we bounced off of that, have a gap overhead above 499. So, this really targets 560 again from where we are now. So it's almost $100 to the upside. I really like the cash secured puts on this one. Going to the CSP as a 9 out of 10 volatility favors premium. So being a seller here. Common shares also are an 8 out of 10, favoring longer term approach for scaling in. So, buying pieces, small pieces now doesn't make it isn't a bad idea. All right, let's look at Ulta Beauty. And Kirk is not going to like this one either. But, I'm going to approach it this way. One thing Sentinel has done in our conversations, we have a lot of them. I bet you I have 30 hours just since Friday. And we talk about a lot. I mean, we're looking at a lot of stuff in the market, a lot of things. We're trying to get him with ears on the ground, looking at things that I can't see. So, but looking at Ulta here, I like all of these bands. Look at this. We got daily, weekly, and monthly demand bands hit target, and we bounced. Look at how we bounced off of this lower side of the band. The confluence is right here around 372. So that is $25 from where we are. So what do you think is going to happen? Well, I think it's going to bounce back to at least a 50% back. So target 1 minimum is 373. Target 2 is 383. And our third target is 390. Now, this is another one where I like the cash secured puts. 9 out of 10 score. Common shares, 7 out of 10. Swing trading as far as options, little riskier. 5 out of 10. You only got a 50% shot on this. Now, we're still tweaking the model. We haven't fully figured out how to back test all of the technical tools at once. However, we are working on that. I do expect a remedy to that within the next few weeks. We just have to work through it. And that's, ultimately, Sentinel tells me what he sees, and then I tell him what I see, and then we agree on how we're going to structure. How's that? All right. So that's what we have for this week, folks. But just quick final thought. Best option is both Adobe and Ulta cash secured put. Best risk reward is Adobe because of the AI integration and software subscriptions. Okay. And with everything that's going on with Meta, I suspect that if they haven't, or they're not going to announce something on this earnings, they're going to announce something pretty doggone soon about automated video generation. It's coming. They're too big. They have too much of the talent in media design. That's where they've led. They're not getting behind. They're not. They'll go hire somebody if they don't have it. And I'm pretty sure they have it. So the best short-term position is Ulta. However, I like lie because of the macro. China's kicking our butt right now as far as gain. That's projected to continue through the remainder of the year. Where is it going to wash? What do people buy when they make money? New car. So I think it's a no-brainer kind of play. But here again, think position size, and I'm going to end with that, folks. Great trading until next time.